Welcome back to MarketSnap, your daily market rundown. The market is starting to trade like it's caught between two worlds, one where AI is the only game in town, and another where the rest of the economy is starting to feel the pinch. Today, we saw that tension play out in real time, with a chip-led rally masking some serious underlying cracks. Let's get into the numbers. The Dow Jones Industrial Average closed at 52,637, up just 0.29%. The S&P 500 managed a 0.42% gain to 7,575, while the Nasdaq also added 0.29%, finishing at 2081. The real story, though, was the Russell 2000, which dropped 0.49% to 277, showing that small caps are feeling the heat. The VIX, our fear gauge, fell over 5% to 15.3, suggesting traders are a bit less anxious, but that doesn't tell the whole story. The big story today was the massive rotation back into mega-cap tech. Meta Platforms absolutely ripped, surging nearly 6% as traders fell back in love with the name. Analysts are pointing to its AI monetization efforts as the catalyst for this comeback after a lousy first half. NVIDIA also had a strong day, up over 4%, as the market continues to view it as the most proprietary chip company in history, according to Jim Cramer. But it wasn't all green. SpaceX stock continued its volatile post-IPO slide, falling over 4.5% as investors debate whether the Elon Musk premium is justified. Looking at the large-cap gainers, it was a tech-heavy list. Meta led the pack, followed by NVIDIA. Applied Materials, Cisco, and Seagate all saw gains of over 2%. Seagate got a nice boost from a Wells Fargo upgrade, citing growing confidence in its AI storage demand. T-Mobile also had a solid day, up over 3%. On the flip side, the losers list was a mixed bag of defense, biotech, and cybersecurity. SpaceX was the biggest drag, but CrowdStrike fell over 5%, and Datadog dropped over 4%. Honeywell Aerospace, which just split off, fell over 7% as the market digests the new structure. AstraZeneca and Gilead were also down, showing some weakness in the pharma space. Zooming out to the weekly performance, the rotation into AI infrastructure is clear. Hewlett-Packard Enterprise is the top weekly gainer, up over 17%, followed by Cloudflare and Alibaba. Dell and Arista Networks also had banner weeks, all riding the wave of data center build-out demand. The weekly losers list tells a different story. Rocket Lab is down nearly 18% for the week, and AST SpaceMobile is off over 14%. The newly separated Honeywell Aerospace is also a notable laggard. This shows that the space and defense trade is taking a breather while AI takes center stage. Sector-wise, technology was the only real bright spot this week, up 2%. Energy was the worst performer, down 0.66% despite the geopolitical tensions in the Middle East. Consumer, cyclical, and industrials also had a tough week. Now let's talk about the macro backdrop, because it's getting interesting. The big geopolitical story is the escalating situation between the U.S. and Iran. President Trump declared the ceasefire over, and tanker traffic in the Strait of Hormuz has slowed to a near standstill. This is a critical choke point for global oil supplies. However, the market is surprisingly calm on this front. Oil prices actually fell 4% today, as traders seem to be betting that this conflict will remain contained. But don't be fooled. This is a powder keg that could reignite inflation fears at any moment. On the economic front, the June jobs report came in soft at plus 57,000 payrolls, which took the pressure off an immediate rate hike. But the Fed is still split. The minutes from the June meeting showed division, and Kalshi traders now see a 54% chance of a rate hike this year. More importantly, 30-year real yields are near levels not seen since the 2008 financial crisis. Bank of America's Michael Hartnett summed it up perfectly. Can't buy bonds, can't sell stocks. This is a tricky environment for long-term investors. The AI narrative continues to dominate. SK Hynix made its historic Nasdaq debut today, and it's a major litmus test for the AI trade. The company is riding the memory chip boom, and its listing is drawing massive attention. But there's a growing chorus of voices warning that AI spending is becoming a bubble. Apollo Global Management warned that a slower AI payoff risks tipping the economy into a recession. And a Barron's article pointed out that the stock market can't afford another Magnificent Seven meltdown. It's a high-stakes game. Looking ahead, we are entering a crucial earnings season. Next week is massive. We have bank earnings from JP Morgan, Goldman Sachs, and Citigroup. The big banks are expected to report a boost from Wall Street trading and deal activity, but the question is whether Main Street can keep up. We also have key reports from Delta Airlines, which just reported a beat today, and PepsiCo. The next 3 weeks will likely decide the stock market's second-half fate. You can find exclusive earnings transcript summaries on MarketSnap. A few other notable stories. The carry trade, which caused a massive market blow-up in 2024, is back with a vengeance, according to Goldman Sachs. Japan's 10-year yields hit 2.88%, the highest since 1996, which is a major signal for global risk dynamics. Also, the EU is demanding Meta dismantle addictive features on Facebook and Instagram, which could be a regulatory headwind to watch. For the long-term investor, the key takeaway is this. The market is bifurcated. You have AI and everything else. The AI trade has momentum, but it has very little margin for error. The rest of the economy is showing signs of strain, from falling consumer confidence to rising geopolitical risks. This is a time to be selective, focus on quality, and thrive and keep some powder dry. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown valuable, make sure to like and subscribe. We'll be back tomorrow with more actionable insights to help you navigate these markets. Until then, stay sharp and invest wisely.